Russia's oil and gas industry might turn to Bitcoin payments to combat sweeping sanctions.
Ray Dalio's Bridgewater hedge fund even is about to make an investment into a crypto fund. These are all signs of deeper institutional liquidity entering the market.
This is not about Bitcoin. It's not about Ethereum. It's about a complete and total business model revolution. I mean, I'm working on this actively in the background in various projects. It's coming at you much faster than you understand. You know, if we, you see me with that adoption curve chart all the time, just trying to get people don't really yet understand what that means, right? We're 300 million active users worldwide in digital assets. It means it gets to, essentially, it's growing at 185%. We get to 600 million plus, call it 750 million by the end of this year. Even if we have a slow year, we get to 500 million. The year after, it's 1 billion. The year after that, it's 2 billion. The year after that, it's 4 billion, right? So the speed of which this is coming, people do not comprehend. And the movement, I think, from the $2 trillion asset class today to the $200 trillion asset class that Jeff's talking about is by the end of the decade. It's the fastest growth of any asset class in all history, the fastest adoption of technology in all history, and it's going to be the fastest generation of wealth in all history. That's what's going on. And we all get lost in the day-to-day of the ups and downs of the market and, shouting at each other over Cardano versus, fucking whatever. And it's just all noise. It's just noise because you've got the biggest, fastest secular trend any of us will ever live through. And we can participate. We don't have to be VCs. We don't have to be the rich dude who's got the access. You just need to get involved. And also keep a very open mind. As Jeff and I have been trying to explain here, this is not about Bitcoin. It's not about Ethereum. It's about a complete and total business model revolution. So it's not just financial, it's everything. And once people open their minds to it, you'll see how big this is. If you were to go back 2 years and look at the narrative, then a year ago, then now, then to Goldman Sachs' homepage being about digital assets. The world is waking up. As Jeff said, is a lot of the journalists are behind and they're forced to write stories because crypto is engaging. And so they come at it with not enough knowledge yet. But, over time, I'm seeing more and more people getting a little more comfortable with the space. But journalists have this habit of always wanting to find a balance to a story. So that they use the FUD, even though most of it is completely wrong, as their balance, as opposed to writing something more nuanced. And I think that's the issue. But over time, at the margin, it's changing. If you go back and think where narratives come from, they don't come from nowhere. So where did the narrative about energy use come from? Because obviously it's ludicrous. I think if everybody put on their kettle at the same time, we'd use more energy around the world than crypto mining, right? So Bitcoin mining. It actually came, I believe, from the ECB or within the European institutions because they wanted to slow adoption. And they've got an ESG mandate. So if they knew it would bump up against that ESG mandate, they could slow adoption. And they're not trying to slow adoption necessarily to stop it, but just to buy them time to figure stuff out because they're feeling like they're out of control of a situation that's moving too fast. So that's what they're doing. And now sanctions is another way, is, they're going to use this for bad gains. What they're trying to do is please stop adopting it. But meanwhile, when you go to Wall Street, they're adopting it really fast now. Having spent a lot of time in that world and still speaking to a lot of people, whether it's the giant asset management firms, whether it's the giant pension schemes or the investment banks themselves. So basically, those guys don't make a move without the regulators giving them the nod saying it's fine.
Of course. Yeah.
It's just tactics. It's tactics in a situation where technology is going so fast that they don't know how to keep up with it. I mean, the reason I got into Bitcoin originally back in 2012, 13 was Cyprus. It was exactly the same. They took the entire savings out of the banks and said it's ours now. And I realized that we didn't own anything. So, yeah, I mean, what happened after Cyprus obviously was a huge run in crypto for the same reasons. And I think you're dead right. And also, I think there's the other thing at the same time that's come, which was the shift from using crypto and digital assets to this soft term of Web3. It's much easier for regulators to say, of course we should upgrade to Web3. If we're on Web2 now and Web3 is better, we should do it. It doesn't have the word currency in it, which was the big toxic word. And so I think that creates a decent Trojan horse as well to make it easier for people, the regulators or the politicians particularly, to say, yes, we need to be pioneers in Web3 as opposed to we need to be building cryptocurrencies. So I think those two things, the narrative, which is, as you said, the core case of why these digital assets really matter, plus this new kind of fancy dressing for it all, I think this is a very significant moment. The market figuring out that it's no longer good enough just to be faster, cheaper, alternative to Ethereum or whatever it may be, or more private than Bitcoin. What people are starting to see, and I've been definitely having conversations with, people at the protocol layer talking about, okay, what can we be known for on this chain? So people are going to split down to use cases, I think. So if you're really fast and you're not super decentralized and you're very cheap, then you're very useful for the securities industry because they have massive volume and they don't care about decentralization at the level of which private money does. So there's whole different people. I think, music industry splits one way, different application tiers will use for different things, real estate, they all have different functions. So there's still a lot of space for this broad number of tokens. Obviously, a bunch of this stuff is never going to gain network adoption. That's fine. It's just the same as a VC portfolio where you understand that a bunch of these firms just won't get traction, and that's okay. It really is, unless you're a trader. And fine, some people are traders, and that's okay too. It gives everybody the opportunity, but just don't lose sight of, if you take the adoption chart, when I always talk about living in the future, what does that mean? What does it mean to have 3 or 4 billion people in 6 years' time? Well, it means a complete change in everything we're doing. And that's not Bitcoin and Ethereum accruing all the value. That is what Jeff's talking about. That's social tokens, community tokens, NFTs, and that's putting up all of the other assets on chain as well. So it's a lot. There's a lot about to happen. Again, people have a tendency to look at today. Well, we can't do that speed.
Right, of course, we can.
No, but everyone's going to build it. Right? That's how it works. Everyone does this all the time. They always take the present and say, well, that's impossible. But the present is not static because every day is a new day and every day things move forwards. So if you were to extrapolate the rate of change of development within these protocols, well, they're moving at lightning speed. Lightning being a classic example. It didn't exist 2 years ago, and now it exists.
Right.
So who the hell, what is going to come out of this space? Well, soon you'll be able to have massive video file on blockchain, these huge dense files, all data, all scientific research, all of this onto blockchain because the technology will allow it to happen.